In this video, I'm going to walk you through the very simple basics of how you should get started in the crypto space if you're new to crypto at all. You want to get invested, but you're not sure where and you're scared about the whole process. I'm going to try and talk to you as if it was your first time getting into it, and a few basics that I might think you may want to consider, and you don't have to overcomplicate things in order to get into it. So I'm going to talk to this as if this was about a twofold answer to two multiple different people. There are certain people who understand about investing and perhaps buying into stocks, and then there are people who don't know anything about that, either one of those. The rules getting into this game kind of apply to both sentiments, and I'm going to try and do my best to just talk down the middle of that road about what's the quickest way and easiest way to get into the space so you can get some of the upturn potential of the market going up, but also not have to get too crazy, and if you want to dig a little deeper into the market as time goes on. So let's jump over to my whiteboard of truth and we can actually talk about it a little bit more in detail. So it's actually not a whiteboard, it is a blackboard, but you get the gist. I will start with talking about the space as a whole. Now, cryptocurrencies as a whole are treated more like stocks than currencies. Okay, so the fact that they have currency in the name is a bit of a misnomer. It is in some ways a new form of a currency. And the closest thing that I would say that is like a currency would be something is actually called a stable coin. And you may have heard of these, and we're not gonna dive into this, but that's what's closer to a currency that you could understand. They generally match currencies that we have today. They're backed by them in some cases, like this would be USDC, would be backed one by one with US equivalent dollars worth of coins, therefore it's worth $1. So you can see the fluctuation based on our dollar and it all starts to make sense. Stocks, on the other hand, work like stocks do. If you know anything about stocks, and again, there's gonna be the group of you who do, it is just like purchasing a share in a company. And a lot of these coins or companies that are developing the coins are companies, okay? And if we actually jump on over to CoinMarketCap, which is a great place to actually do a little bit of research on them, you can scroll down here and we can take a look and I'll explain to you which ones are and are not. Bitcoin is an outlier. It's actually a proof of concept, was the leader in the space, and is more considered the gold of the space. It's very similar to a commodity, actually. It has a store of value property that would be similar to a commodity as opposed to, say, a currency. And you wouldn't use this to pay someone their salary like you see happening in the NBA. You wouldn't use this to exchange dollars back and forth. It's not really great for that because the volatility is so high in it. But it is a great store of value over the long run. And the really important part here is to remember that cryptocurrencies have a long run cycle. There's a 4-year cycle that everything generally at this point has adhered to that you kind of want to understand a little bit further on. But moving on down, we actually have the next one in the space, which is Ethereum. Now, Ethereum is an ecosystem. It's actually software. And Ethereum organization is a group of people, individuals, who have some Ethereum staked in their name and were given to them when they developed the product, Ethereum, a coding language that is used to make applications on top of. Now, let's take a look down here and I'll try to find another one that is actually built on top of it. Polygon isn't built on top of it, but is actually a scaling solution that allows Ethereum to work better. For example, where is one? Let's say a stable coin. Where is USDC these days? There it is. USDC is a stable coin. It is actually built on top of the Ethereum network. So it uses the technology that is in Ethereum. Therefore, it's kind of tied to it in some way. And the reason I bring this up is because this is kind of like a stock. It's a group of people who work together. They have incentive to continue making it because as the value of it goes up, it has value. They keep making money. So it's treated just like that. When you buy, a $3,000 share of Ethereum, you're buying a stock in that company to some degree, but you're also able to use it as transaction fees. You're able to send it to people to pay them money. It is synonymous with a currency in that capacity, but you need to consider investing wise that it's more like a stock. And this will be the same for all of these down here. Now, not every one of them is based on Ethereum, but Ethereum is the biggest one to understand. BNB is its own coin. This is Binance Exchange. They actually have their own ecosystem and they have their own group of currencies on top of that. Tether is is actually on Ethereum. Solana is its own ecosystem. So again, it's more of a company based. It actually has a group of individuals who are developing the code to build applications on top of it. Cardano is another one that's completely decentralized. A group of people got together, and when you're buying into this ecosystem, this one isn't developed yet. There's no working applications on it, but there will be in the future. But the premise is that if you're buying at $1.34, then you're believing it's going to go up. So the reason I talk about this is if we look at it as like a company, let's use Cardano as an example. There are what we call fundamentals that you can dive into. And if you're into stocks and into investing, you know about this. You start to realize that you can look at things like your market cap. This is a traditional metric that's used in investing all the time, that used to tell you how much it's worth. This is currently worth $44 billion, just the casual $44 billion. But that is that is the difference between the outstanding supply, circulating supply, and the cost. Once those two are times together, you get 44 billion. That's a simple metric you can use to invest. But looking at the page, when we click on it, you can see your chart. We can actually look at a little bit of information underlying the company. It's a platform with the goal of a change maker, innovator, visionaries to bring about positive global change. So they actually have a whole thing they're doing. So you can look into this just as if you would be doing an analysis or looking into the fundamentals of any stock. Now, this part of the conversation was generally probably more for people who are into investing. If you're not, then really what you need to understand is that there are communities of people who believe this is going to do well. And if you believe them and you look into a little bit of research and you believe what they're going to do, then you may want to pick some of this up. Because if you think that based on this little chart here, if this wasn't the all-time high and it has a chance to come back up, you can make some money. That's just basics of investing, okay? So you want to buy, right? So we come here, you're buying low and you're selling high. This is the key we're talking about here. Nothing has changed in this space. Even the concept of when you're talking about where you're buying low, why you're buying low, is the same sort of concept. They're companies, they're organizations. Each one of those cryptocurrencies isn't just a dollar. It's not like buying the euro, buying some British pounds or some Swiss francs. Let me just have 100 of them. To you, that sounds foreign because that's a currency. Why would you just buy Swiss francs? Unless you're doing Forex trading, you wouldn't. You, as a standard investor, would not buy another currency unless you were traveling to that country to use it. You could make that analogy for cryptocurrencies too, but this isn't where you need to be. You don't need to be thinking too far outside of the space of, is the project or the fact that it could potentially go up a likelihood? That's really the main fundamental you want to look like. Is it going to go up? We want to see a chart pattern that looks like this, not like this, okay? So the two main coins that I would say for every average investor that should have in their bag, and that's what we refer to as your portfolio, are Bitcoin and Ethereum. The number one and number two on the charts. And this is a no-brainer for a very simple reason. 800 billion in volume. The next one along has close to 400 billion. And the rest of them combined barely come close to even getting up to Bitcoin's there. And we actually can see the total market cap is around $2 trillion right here at the very top. It's actually right up here. That's $2 trillion. So once you minus 8 billion and then 4 billion, you're left with about 800 billion left, right? Because that's about 1.2 trillion in these two coins alone. These two coins account for, what's the math on that? 65% of the whole market is in these two coins, and that's for a reason. That's for a reason, because those are the two ones you should be holding on to. Those are the two that you should be considering when getting into it. And as I said, Bitcoin is similar to gold. This would be similar to a tech company that everybody wants, like an Amazon. Something that's ubiquitous in our lives, Amazon, a Google. Do you think these companies have value and are going to stay around for a while? Have you ever used Google? Have you ever used Amazon? Yep. Ethereum, if you purchase any coins on an exchange, the vast majority of what you're going to be doing is going to be on the Ethereum network. Whenever you go, if you were to say get a Coinbase account, and this would be a very simple place that I would start for most people to get an exchange, and this is talking from a US perspective because there are limitations we have from our Security Exchange Commission, which regulates all of our investment options. Picking an exchange that will play nice, allowing you to purchase some with your bank account, one that you trust, one that's playing by the rules. Coinbase is one of them. They do have higher fees. Don't necessarily not do your diligence. Go do your research, figure out which exchange you would like. I also wouldn't be scared to pick up more exchanges. I have multiple exchanges I use on a daily basis. Coinbase is a great place for the beginners. Right here, let's just stay with Coinbase. Keep it simple. I'm sure you've seen the ads. You know that they've been listed under this ticker, coin, right here, has been listed on the US stock exchange. So this is a reputable company. This is a company that you can say, hey, is probably not going to take your money. So when it comes down to trying to talk to amateurs and new people to the space, find your way, your avenue to get into it, which is something like Coinbase, reputable, not a scam, not too scary, works just like any other brokerage like Fidelity, E-Trade, those other big guys out there, Vanguard, and purchase some pretty straightforward stocks you know. Now, if I were to tell someone to get into stocks, I would say pick products you know and understand, and you would use on a regular basis that you think probably are going to be around. Get those and do the long-term strategy. In the meantime, do your research and go look for those altcoins that are going to moon 100 times. You can do that after you're in the space with a little bit of powder. That way you can ride the market up. Now, if you have a total portfolio, you may want to allocate a little bit less because this is an entire risk, the risk category is over here. But what I would definitely say about, making these two as your biggest spaces, that I'm basically telling you this is the equivalent of buying the new gold. And this is worth more than gold, honestly. This Bitcoin has more of a store of value than gold will currently. And gold, as you can see, is going down, but Bitcoin isn't. But I'm telling you, it's the equivalent of purchasing like a commodity like gold that can be used, will have a store of value, and people will continue to see that value into the future. Ethereum would be the equivalent of purchasing yourself a nice, juicy tech stock that you see good legs in. And I would say this is like buying an Amazon during 99. This is the 99 tech stock era. This is the opportunity to buy that tech stock right there. That's the concept I would say for getting Ethereum. This is not financial advice. You are absolutely must do your due diligence in looking into your own research and looking into these coins. But if it was me as a complete hypothetical, this is what I would be doing to start off with. And actually, I may even say this is probably what I did do. So starting somewhere really simply and looking at it like, what's the biggest players in the space? Again, they're about 65% of all cryptocurrencies worth is in these two players here, Ethereum and Bitcoin. Once you start playing with that, you can get a little bit deeper, but you have the opportunity to ride the wave. And let's take a look here at the all-time charts and look what potentially you could have got if this decision had been made previously. So let's say in 2020 you had made that decision, price was $9,000. We did hit an all-time high of 60, I think it was 67 actually, I ended up making it to. So that was a possibility to gain while you were still working it out. Just not advice, just a suggestion. I want to pause here just to kind of talk about risk a little bit because I think it is something else that you should be aware of when you are kind of getting into cryptocurrency and where you should assign it as far as your overall portfolio. It's not just something you should dive all your money into necessarily. It's something you should consider when it comes down to where you are in life on a timeline and what your goals are and where you're trying to get to. Risk is one of those things that a lot of investors will actually make and make some very important judgments about. So if we plot a little graph here, we can look at risk on the y-axis and the x-axis will be your age. Let's go ahead. Most people would advise that you have a risk profile that looks like this. And I'll do it again so I can use more of this platform. you'll have a risk profile that will slowly go off as you get here. And let's say this is a point where you get to, that's say 80. And here's retirement age at 65. And let's say you started your investing career at 20. I don't know, maybe that's the wrong number. Let's use 18 because you were really on top of it. I was not. And you decided to start getting into some sort of investment. Whether that was maybe you got a house, you had a good job or whatever, but your risk opportunity should be higher. So this is on a scale of 1 to, let's say, 10. It doesn't really matter the metric you give to risk. I believe there's some actual metrics and risk profiles that you can get into out there, but it's one of those things where you want to taper it off over time. And the reason is because if at 20, all of your money dropped to zero, and again, you can't use the metric, I mean, I shouldn't be lining up here, but this was then all of a sudden one day you woke up and you had $0 at 20. Do you have time to invest more and make that money up? You do. You have all these years. But when you're at 80 and your portfolio was to be at $0 because of a crash or because of some speculative asset, would you have much time left over to gain that back? Theoretically, we don't know where the future is going. There's not that many notches left on the overall graph at all. So you really want to be assigning higher risk to the earlier years. And I would say, you know, again, I'm in the middle bracket, I'm in the 30s right now. So I'm in this sort of category where I'm a little bit more bullish and I can still have some time to make this up, because 30, 40 years is still enough time to really get to those goals and say you're good to go. But you may want to say, hey, 65 is where I want to get to. So I actually want to make this curve a little bit more steep. And then after 65, I'm going to mellow way out. Or you may not, you may just be naturally risk averse. So you may just kind of be like this, right? Right across the board. You may just say, hey, you know, I don't really like to get into that sort of stuff. I have my 401k and that's where I want to sit and I'm fine with that. That's okay. But understanding your risk profile is kind of how you want to do it. It's something you should do the diligence of. Sit down, spend some time, look at what your overall risk you think you would assign to it, how you want to go about it. And really what you start to look at is things like buying a house. What kind of risk level is that? You give that a risk assignment, but then you say stocks. Within stocks, you subcategorize them to risky and more stable, you know? So I would say something like picking a fundamental like GM would be a stable one, or Bank of America. I think, I don't remember what their symbol is, but let's just call them B of A. It's not the symbol for the stocks, but let's say those are companies that have been around for a long time. They have, but they're not necessarily innovators, right? So they're not going to be doing the moons. But let's say if in the, you know, maybe this was done in 99, right? You got into Amazon, that would have been a riskier bet, especially during the dot-com bubble. But, you know, that there may also be something in there called the VSEC chain, or, you know, that's going to be the new hot opioid out there that's going to be in the pharma space. That's going to be risky. You're going to want to assign less of your portfolio weight to this section than this one if you're over here. But if you're 18, you may be all in on this. You may put, again, let's use this instead of as 99. That's a 99%, and you may put 1% in stables here. And over time, you'll start outweighing this as you go along this chart. You'll be over here. This is the same for crypto, okay? The writing's getting harder. Inside of crypto, you're going to have riskier versions, and you're going to have more stable bets. Okay? This is going to be these guys. The ones at the top. Those are going to be those. Over here, you're going to be playing with metaverse calls. You're going to be playing with games. You're going to be playing in spaces that are low in micro caps, that are things that are worth only $200 million. But within this, you have to look at the whole thing as a risk. How much of this is in this? So in crypto, you may want to say only put 10% in the whole space in crypto. So say you had, let's say you have $10,000 and you want to invest in that. You may say, okay, I'm going to set aside some real estate. I actually put some into someone who's got a real estate and they wanted, you know, maybe $3,000 from me, and that's going to be in the real estate space. And then over here in stocks, I'm going to put into it $5,000. And then into crypto, I'm going to put $2,000. And because this is more risky, I'm assigning a little bit less. Because stocks are a little bit more normal, I'm used to it, I've seen it, I'm gonna put 5. And then real estate, I am worried maybe the market crashing at this time of year, who knows, you say 3,000. But you've kind of decided where you see each risk assigned and where they're gonna play. And you look at the whole thing, you look at your whole amount to invest with, and then you look at overall your portfolio. Crypto probably should be one of those less ones. They should be on the smaller end of the scale. You don't necessarily want to have it be too large of your portfolio. So I know that was a little bit of a tangent on the risk of it, but it is something that I really wanted to point out to a lot of people when they get into the space, because they're like, I'm not really sure how to jump into it. Don't jump into it very heavy. You don't need to necessarily put all your money into it. That's not what I would say. There are some gains to be made, and there are people becoming millionaires overnight all the time. But do you really want to throw that risk at it? Where's your age bracket? Where do you just generally sit risk-wise? How do you feel about it? Where are you on your terms of goals of retiring by whatever age? And don't put more than you can afford to lose in it. Once you do that, that's a peace of mind for your head. Then I would start at the very top, picking some of the easiest and more straightforward coins. Bitcoin, Ethereum are pretty much synonymous with the basics of any portfolio someone should have. Only degens, only degenerate gamblers are playing solely in the microcap space. If you're just playing in the microcap space, two things. You're already filthy rich, you're a gambler. Those are the only two places you should be going if you're outside of no investment in Ethereum or Bitcoin, in my opinion. And it's just an opinion. And again, none of this is financial advice. This is all just educational content and a hypothetical situation that anyone can watch and see if they can learn something from. So go ahead, get into the space, look at getting into your first exchange, consider something like a Coinbase, whatever one's gonna cost you less, but remember, reputable one, peace of mind. You don't have to worry about being scammed. Start there, get a little bit of money invested. That little bit, as it goes up, I guarantee you will be the incentive you need for that little bit of research you've been trying to do to manifest itself. You're definitely gonna do the research when you start to see some gains happen. It's the incentive you need to keep it going. So hopefully that was helpful. You know what to do if you liked any of the content. If you did, smash the buttons. Otherwise, I'll see you in the next video.